A lot of people are making mistakes in the market and losing money because they have not yet understood how to trade the trend. When trading forex, you need to know how to trade the trend, and you need to trade with the trend so you can make money, and also so that your trades will hit your take profit. Today we're going to be talking about momentum and market direction, so it will help you when analyzing the market, especially to understand trend. Let's go to the charts.
And in this video, I'll be explaining the three types of market structure we have. So we're talking about market structure first. Later on, we'll talk about market structure shift, right? So I'll be explaining the three types of structure we have, the three major structures. The first one is we have the bullish structure. Next now we have the bearish structure. Then we have the market. We have the consolidation or ranging structure, right? So the main one I focus on when I'm trading is the bullish structure and the bearish structure, because I don't really trade the consolidating or ranging structure, because it just simply means that the two pairs are either strong at the same time. That is either euro, for example, for trade. Okay, this is USD and JPY, Japanese yen. This is JPY is strong at this particular time, and US is also strong. Then the market begins to consolidate like this. Gives us series of the tap up, down, up, down. I normally call this indecisions because market is simply indecisive. That is, the two pairs are both strong. That's why price is moving up and down, giving us sells and both buys. And something like this now, markets can anytime break any of this zone, right, to the up or to the downside. That's why I don't really trade this market, because it's not giving us a direction. Then the next type of market structure we have the bullish structure, giving us series of higher highs and higher lows. We all know this, higher highs and higher lows. While the next structure is a bearish structure, right? Giving us series of lower highs and lows. And when trading a trending market can be quite easy, right? We simply look for 2 points when trading trending markets. You can always look for that price always has to break. If it's the bullish market, price has to break the higher high, right? For you to look for a continuation trade. So let's say market is here at this particular point, and market is all the way here. You don't just blindly look for a buy here. If market is very close to breaking this higher high here, you don't blindly look for a buy here. Or if market has actually even broken this higher high, you don't look for a buy here. No, you wait for market to give you a pullback and you look for your buy at this region here, at the higher high, that will eventually turn to a new lower low, right? That is, resistance to become support and support to become resistance, if that's how it will be easier for you to understand. But simply, this zone here now will now be known as your breaker block. I'll still explain what those mean. And also, you can also look for trades at your order block. And the moment price in this bullish trend breaks this lower low, right? When price breaks this lower low, this higher low, sorry, many price breaks this higher low, just know that this bullish trend is kind of shaking, and that means its price might reverse and start forming sales anytime soon. So when the price breaks this higher low, then you look for confirmation trades to take reversals. But as price is within this particular zone, it's just giving us a pullback. It can give us a pullback. Price can give us a pullback, and when price gives us a pullback, Why did this suddenly disappear? And when price gives us a pullback, right, it can simply come here, another block that is taking another block close to our major zone to give us continuation of the trade to the upside. But just know that when trading a bullish market, right, when trading a bullish or a bearish market, you are simply trading trend, right? You are trading the continuation. That means you're looking for buys when market is buying and looking for sales when market is selling. Don't something like I want to quickly take a scalp during the pullback. Let's say market is buying, I want to quickly take sales. If you don't know how to trade trend correctly or perfectly, then don't scalp or try to jump in at any trade you see. Wait for market to give you buys, then you take buys on a bullish market. And wait for market to give you sells and you take sells on a bearish market. And avoid to trade the consolidating market because it can be very confusing for you. You might end up losing money because, as I said, price can do something like this when you're expecting to retrace all the way up here for you to take, your entry is lying here for you to take a sell, price down breaks this to the upside. You have lost money, right? And also know when to stop trading a bullish market or a bearish market, to stop trading trend. That means market has exceeded this particular trend and it's time for markets to reverse. And when market reverse now, market will now take the liquidity, the trend line liquidity, and clear it before it now continues up in that trend. And this now, if I explain liquidity now, I will start going into liquidity. I also post a video about liquidity very soon because we have different types of liquidity, right? So this is simply how a bullish, bearish, and consolidating market looks like. These are the three types of market structure we have. And after learning properly a trend market, a ranging market, right? The next thing for you to learn is market structure shifts, right? Which can also be called change of character and break of structure. Let me just give you some tips here before we go to our next video. Market structure shifts is simply market reversing. Why it's called change of character? Market is changing its character it was has been given. And break of structure simply means the market is just breaking structure for us to take a continuation. The market is a bullish market. Market is just breaking the higher highs, right? Market is breaking the higher highs to just give us a continuation to either the upside or the downside. So here is simply a break of structure. Market is breaking this to the upside to give us a continuation. If you can see the chart, let me just show you on the chart so you can understand properly. Right here, this is a bullish market, right? The bullish market all the way here like this. Up to this point, market broke here. And now we are expecting to take rapid sales to the downside. I see now price is now breaking structure to give us sales to the downside. Might look confusing for you. You can also see here, market has been bullish all through. Market has been bullish. You can see that price came all the way to this low, right? But it didn't close up below it. Market didn't close below this low. If market has closed below this low, would have been looking automatically for we start looking for a change of character or market structure shift, right? So market just came, respected this other block around here, and boom, all the way to the upside.